So this is the dashboard. If we start off here, this is where you basically access the main sort of dash, if you like. You've got your trading accounts down here. So all of your trading accounts will appear at the bottom, anything that you're tracking from MT4 and MT5. And you can quickly access all the main sections of the site from here. So we'll start off, I'll go through the left-hand column and obviously we can start off there. So you've got a little icon there. You can just do to shift basically the size down if you want to get a bigger screen. If you've got quite a small screen, you can hide the menu away. At the top here, we've got an alert. So any dashboards that you're using, the alerts will come up in there. We have the London open time, the New York open time, and the Tokyo open time. So this is obviously London session, New York session, and Asian session. So it just so you know where you are in the world, what's open, and how long it is before things open. You've got a light and a dark mode. It shows you here what membership level you are, and depending on your membership level, you'll have. I've got all the admin stuff, but you'll have your profile, your settings, and your managed plans. So the managed plan basically is where you can go to upgrade and downgrade membership, and it tells you what you get on each level. You've also got your subscription information down there. So left-hand column, we have starting off the economic calendar. So this is basically the same sort of thing as you will find on Forex Factory, Financial Juice, loads of other places. But this is sort of laid out in the way that I personally want it, which is basically information instantly as to whether this is a no impact, a bullish, or a very bullish, bearish, or very bearish news event. So it gives you the previous, the forecast, and the actual, as you would normally expect. And then it will tell you whether or not that news event is very bearish. So this morning, for example, we've had the CPI numbers come out. There is no impact because the forecast and the previous and the actual are the same. So we basically got the actual and it's the same as the forecast. So there's obviously no impact to that. You can also expand every event out and it will give you historical data showing you how bullish or bearish the last few releases have been. Depending on your membership level, you will then be able to select different time periods so you can see more data and it charts it for you. So there's an in-depth look into every single news event available directly from the economic calendar. We also have an AI analysis section. In the AI analysis section, you get a market overview. This is updated on a daily basis every morning. And what it does is it analyzes the news that has been released over the last, I think it's 2 weeks I set it up at. And it gives you a basic overview of what's going on. So it's kind of somewhere you can just come every morning and go, right, what's been going on? What impacts are we likely to have coming up, and what is the impact on the specific currency? So it's a kind of just a morning news snippet, if you like. Bear in mind, if there's been no news, this isn't going to change. So it updates every day, but all AI will do is use the same data to rewrite it in a slightly different way. So you get kind of a different take on it every morning, but it's the same information. You get individual currency analysis, which basically you can go through every single currency and it will give you a stance for that currency based on the fundamentals that have been released recently. So for the US dollar, we are currently neutral with 55% confidence. There's an algorithm that calculates all this, and it basically analyzes and gives you the most recent news events, and it tells you here what's coming up and what risk factors there are. So this is basically an analysis that's been done based on, again, recent news events. And you've got one of those for every single currency. It gives you kind of a bullish or a neutral stance or a bearish stance based on what the most recent data has been. So if you've had a lot of weak data coming out, that currency is likely to be weak. Therefore, obviously, if you've got the pound being weak and something like the euro being strong, you would expect euro pound to have gone up. We also have individual forex pairs, so all the majors there, and you've got the minors, and it gives you a stance on those. So there you go. There, as I just said, euro is bullish, the pound is bearish. Therefore, the stance on the euro pound is bullish with 70% confidence short term, because we've had good news from the euro and bad news from the pound. So therefore, obviously, it gives it a slight stance. This is a barometer, if you like, that you can use as a kind of moving average if you want. So should I be looking more for shorts or longs? You should be looking more for longs on euro pound. Doesn't mean it's not going to go down though. Just means that the likelihood of the fundamentals are going to drive it higher. So There you go. So that's your economic calendar. The fundamental analysis section basically gives you all the latest data for each individual currency. So if you want to quickly see what has been going on with the pound lately, you can come over to here and you will get all of the most recent medium and high impact news events. So you can see that the CPI came out this morning as forecast, there is no impact. The earnings came out as no impact, average earnings. Claimant count came out very bearish, no impact on the GDP because that came out as forecast. Your retail sales were very bullish, manufacturing, PMIs, bearish. So it's just basically telling you a quick snapshot of how everything is going, yeah? So you can also expand these out and look at what the most recent CPI releases have been. So you can see that in the pound, in the UK, for example, recently, our CPI numbers have been bullish, 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 bullish. So we've been forecasting something and we've been getting higher numbers, forecasting higher, forecasting higher, forecasting higher, forecasting the same. So CPI has been going up. Therefore, there's more chance that we will not drop those interest rates because inflation is going higher. So you can analyze each individual one. You can also select different time periods depending on your membership levels as well. So that's a quick glance at what's been going on recently within each individual currency. We then have the deep dive where you can look at specific stats on each individual news event. So if you just want to, for example, see what the interest rates are for everybody at the moment, you can filter it by the category and you can go into the euro there. They are at 215. New Zealand is at 325. Aussie is 385. So it's just a quick overview of what's everybody's interest rates doing, what's everybody's inflation doing. So you can get a fundamental sort of bias, if you like, for how everything's going. This also gives you the average differentials here, basically, but this is a better tab to use for that. So you can filter that by different impacts. You can filter it by just looking at the Aussie news. So it's a bit of a similar one to the overview. So this one is more useful if you just want to see what's going on with unemployment for all currencies. So this is the main sort of filter. Differential analysis. This is partly how we determine whether or not we are bullish, very bullish, or neutral. So with a differential, what this is saying is here, for example, the average differential for non-farm payroll is 14.5. Yeah, most of the time it's higher. So it's looking over the last 11 events here. So this is the biggest differential we've ever had on non-farm payroll. That is the biggest differential to the downside we've ever had. And this is on average what we get. So when the next non-farm payroll comes out, if they are forecasting, for example, a 22 and it comes out more than 14 different to that 22, that is very bullish or very bearish. If it's within that sort of parameter, then it comes out as normally bullish or bearish. Okay, so that just basically gives you an idea of how we're calculating these statistics here. You don't really need to know about them, but if you do want to know on average what a, so let's say, for example, non-farm payroll comes out and the market spikes 2 ADR to the upside. You can come in here and go, why did that happen? Well, the biggest positive differential we've had is 107. If the differential was 120, for example, you're going to get a much bigger move. If that's the biggest wrong result we've ever had, and it's bigger than that, it's going to be bigger impact. And again, this is going to come back to news trading and how we're going to trade news. AI analysis is exactly the same as you get over there. So it's just somewhere you can, on the economic calendar. So it's just somewhere you can go to access that again. Place. Retail sentiment. So this is our traders throughout the world. So depending on your membership level, you will probably only be able to see just the majors, I think, in here. I get to see everything because I'm an elite member or a pro member, doesn't matter, whichever. But you can basically filter this down to see strong signals only. So the way that sentiment works is this goes off and accesses brokers throughout the world who will publish their positioning data from their clients. So there's a number of brokers which will give you that information. So they will tell you on the CAD Swiss how many are long, how many are short. So what we can do is we can take all the data we can get from different brokers around the world, big brokers with lots of clients, and we can aggregate that down. So what it shows us here is for the CAD Swiss, for example, 95% of traders are currently long, which means that we want to be selling it, because typically what happens is when the retail crowd are strongly focused on one direction, the market typically moves the other way, because, as we know, 60 to 70% of retail traders lose. They get it wrong. That means that there's more chance of the market going in the opposite direction to what the general populace is doing. Over here, we have a historical retail sentiment, which I'll cover in a sec. But what you can do if you're a pro and elite member is you can filter this to just show strong signals. And there's a lot of them today. Wow. So this is showing you basically, been a lot of movement, obviously. There are huge swings in one direction or another at the moment. So down here, we've got the Aussie New Zealand. 5% of the market at the moment are long. So 95% of the market are short, meaning that it's likely the market will push higher because it goes the opposite direction. So this historical sentiment over time, you can basically analyze in here specific currencies. So if you just wanted to look at one currency, Aussie, New Zealand, let's pick, probably moved a little bit more sort of around about the middle. So you can look at the long and the short. You can change the size of that graph, but basically what you're looking at here is how many are long, how many retail traders percentage-wise are long, and how many are short. When you get these crossovers, you'll find that the market will tend to change direction, but also when you get exaggerated moves in one direction. So as you can see here, market strongly pushed up, and this was around about August the 25th. The market pushed up. We go down to August the 25th here. You can see what the market did, yeah? So let me try and get you both on the same page. So that big strong push up there caused that strong push down. Then we had a little bit of a push up there. The market pushed back down. Then everybody started to go short. What did the market do? It pushed up. Then everybody suddenly went long. The market went short. The market does the opposite to what retail traders do. It's a very tricky thing to trade this. The best way to do it is when you see a fast change in direction from there to there, that is when you tend to want to go in the opposite direction and take those longs. So this is quite a good little tool for scalping contrarian views. You can change it here so you can see different types of data. I've got it set to all. You can switch over to different time frames as well. So if we look at the 4 hour, you won't see this change an awful lot, but there you go, daily. And this chart will automatically change as well to the currency that you're selecting, and it changes to the time frame as well. So this is now a daily chart. You can see basically, not as clear actually on the daily. Yeah, it's not as clear on the daily. So that's a 30-minute view. So you can see the movements in the opposite directions much more clearly. Okay, so that's your retail sentiment. A lot of people trade by retail sentiment. I have done in the past, but part of the reason I've got this data in here is so that I can put together a kind of an overview of each individual currency and see whether there is a signal with retail sentiment, with fundamental analysis, with currency strength, with indicators to build that picture of we should be going long or should be going short type thing. So there's your retail sentiment. Currency strength. So this is the current currency strength. There's an algorithm. It is all explained here how the algorithm works. All of the pages have got this little help button there. So if ever you've got any questions or anything, it'll all be in there. Yeah, how it all works. So currency strength. The alpha I wouldn't worry about too much. This is a smoothing mechanism to make sure you don't get big spikes, basically. But that is kind of the industry standard is what it's set to, so I'd say to leave it there. So you can check how things have been moving over the last few periods on the hourly time frame, the 5-minute, the 4 hour, daily, etc., etc. So here we've got it set to hourly. At the moment, looking at the hourly, the US dollar is the strongest currency that we have, 56.7%. The New Zealand dollar is the weakest at 22.8. So a way that you can use this is you could look for opportunities to short US dollar New Zealand or New Zealand dollar, US dollar, for example. So, or rather in this case, you want to buy New Zealand dollar, US dollar. Because at the moment, the New Zealand dollar is weak and the US dollar is very strong. Okay, so that is likely to change. Yeah, after something is pushed hard in one direction, it pulls back. You can also use this for news trading. So if there is a US dollar news event coming out, you would want to trade the US dollar, who is expected to push or pull very hard when that news arrives, against the weakest currency that we currently have. So for example, today, we have obviously FOMC today later on, but I'm going to use as an example, let's look at the CAD. So we've got the CAD rates coming out this afternoon. So let's look at that one basically. So the Canadian interest rate is going to come out. That's due to come out at 2.5. If that comes out dramatically different, the thing that we want to trade the Canadian dollar against today would be the New Zealand dollar. Because what you're going to find is when the CAD pushes hard, either bullish or bearish on that news, it will move further against the weakest currency out there, because this thing is not moving. The New Zealand dollar has got no strength at the moment. So if we have the Canadian dollar suddenly move in one direction, there's less resistance on the New Zealand dollar, which means that the move is faster. So you will likely get a bigger ADR result, a bigger average daily range of movement, if you trade against the weakest currency at the moment. You can look at it on each individual time frame. You will get different results, because obviously this is basically looking at a much shorter time frame. So on a 5-minute chart, at the moment, right now, the pound is much stronger than the Swiss. So if you're going to trade news events, this is probably the time frames you would look at. You'd look at the lower time frames. And there's a chart here showing you how it's progressed so far. So 9:55 through to 11:30. This is broker time. So broker time is GMT +2. So obviously time is now 8:40. That's an hour out, isn't it? Doesn't really matter, actually. I mean, we'll change that, but it's how it's moved over time is what is the important factor. So if you look at all of these, you can see the Swiss franc. It's been fairly neutral, but weakening over the last sort of half an hour or so. And obviously, you can change the time frame. You can look at it on a daily basis as well. So if you're looking to take a long-term trade, you can say, all right, I'm going in long. What is the weakest thing at the moment? So if you want to take a long position on the euro, because you think the euro is suddenly going to become bullish, what should you trade it against? The US dollar, because the US dollar is the weakest thing we've got out there at the moment on a daily basis. You can see it's been weakening off gradually over time. So that's currency strength. You can use that in any way, shape or form you want to. A lot of people trade currency strength, so it's included in there. It's a very, very popular indicator. Indicators, indicator dashboards. I've included in here my main dashboards that I use. So we've got the RSI dashboards. So these are what we call power dashboards. So this is automatically set up for RSI 10s on the 5-minute time frame. So you've got the 30/70, 25/75, 20/80, 15/85, and 10/90. So basically, the further along here these sort of pills are, the stronger the move has been. Therefore, if you're looking for mean reversion opportunities, you want to be taking things that have pushed really far in one direction. So obviously with an RSI, the way that it works is you have the overbought and oversold levels. If the 5-minute is over there, the 15 is over there, etc. If they're all over, then it's been pushing really hard in one direction. But with this one, it's looking at one time frame. So if the 5 has pushed above the 70, above the 70, 75, the 80, the 85, the 90, it's been going very strong in one direction. There will be a profit take pullback leg on that very, very shortly. So that's basically what this dashboard is showing you. So you can quickly look, what is the strongest move we've had on any individual symbol today. If you're looking for mean reversion opportunities on low time frames, this is what you would use. You can do it on every obviously time frame as well. You can select symbols, you can add all forex symbols in there. Let's add all those in, so we can see at the moment gold, silver, has been moving quite nicely. You've got the 30-minute, the hourly, and the 4-hourly as well. So you can, the 4-hourly US dollar Swiss, very big move on the US dollar Swiss. That's above the 80 level, or sorry, rather below the 20 level. If you want to see the actual data, you can click show values and it will pop open the data window to show you the actual reading. So at broker time 04, which is obviously this is a 4-hour time frame, that's the last closed 4-hour candle, that was sitting at 18.7. So good buy opportunity on the US dollar Swiss. We've got the multi-time frame dash. So what this one does is it monitors multiple time frames at once. So as you can see here, we've got the 5-minute time frame, the 15, 30, the hourly, the 4-hourly, and the daily. So if you've got something where everything is lit up in the same direction, so everything is red, it means that you are right at the peak of a long-term and a short-term push in one direction. So really good opportunity to take a short. So there's not really anything set up like that at the moment, but you can change all of these as well. So in each column, you can go into them. So you can change the levels. So if you wanted to use the 10 period or the 70, 30 overbought, oversold, you can change what it's applied to. You can change the time frames. You can also select different indicators. But for the standard dashboards, I would leave them as they are. And we've got the ADR dash there as well. That will load the data in a second. You can see it auto refreshes on a constant basis as well. But what that's going to do is basically load in the ADR data for the day. It takes a little while to load in because there's a lot of calculations going on the dash. But once it's loaded, type those values, you'll be able to see instantly if anything has hit its average daily range. So I have it set up as default to start at 75. We have 100, so that's hit its average daily range. So there's good mean reversion opportunities. Anything that extends above it, obviously, is a stronger potential sell or buy opportunity. Color coded, so we can see that silver has pushed above 100% of its average daily range already today. So there's a good chance you'd be looking for shorts on that. That would be green, obviously, the other way around. And if you want to open that up, it will show you the values as well. So the average daily range is 83.3 for the last 10 days. And we are currently sitting at 94.1. So that move has happened. And it shows you when that was last updated as well. That's broker time there, 10:35. It's roughly 8:30, 8:40 odd. So there's ADR. You can also create your own dashboards. So there's a little new dashboard button up here. I've created one called My First Dashboard, and I've included an RSI 14, a smooth moving average, an exponential, a MACD, a Bollinger Band, a stochastic, an ADR, and an ATR. Yeah, so you can just basically make your own dashboards up with your own columns as you see fit, whatever timeframes you want to use, and you can set as many of those up as you like. You can also set alerts. There's your alerts. So I haven't got any alerts set in here. There's no history. But if I want an alert, I just click that and I say my alert or whatever. And there's an AND logic and an OR logic. So it can be any of the conditions or all of the conditions. So if I said I want to monitor all of those individual indicators, I would choose OR, meaning that if any one of these is signaling, then I want to know. And I can select whether I want a bull signal, a bear signal, or any signal on it. So for this one, for example, on the RSI 14, 70, 30 on the hourly, I want to know if it signals above or below. And I want to know if we are above or below a smooth moving average. There's a MACD signal, which is where the fast and slow cross, or the signal crosses the slow line, I think it is. Yeah, fast line, slow line, can't remember. I don't use MACD. Bollinger Bands, obviously, if you're outside the standard deviation. So if a candle closes outside the deviation, it'll give you a signal. And you just basically set those up. And what it will do, when you create those alerts, it will give you an in-app notification. And what that will do is you'll get this little bell up here will pop up and say, we've got an alert. You have to have the dashboard open. Okay, so this only works if you are on the dash. So the idea is you open up the as many instances of this as you want, have them running in a browser, and basically it will pop an alert out to you and tell you that there's been an alert happening. So there's your indicator dashboards. Correlation analysis. So this is something to do with position trading, but also for people that want to trade more than one instrument. It's important that you don't obviously go with two symbols at the same time that are going to move in the same direction. So a really easy correlation analysis to show you, actually, let's do indices, are the way that the indices move together. So, for example, I've got multiple indices here shown, so you can select whatever you want in here. You've got fast selection buttons. You can select the time frame you want to look at, the number of periods back, so that's the number of candlesticks. The correlation threshold is how much they move together, and absolute, you can read about that, but I'll just use absolute indices standard. And what this shows you is how often they move together. So you can see, for example, here, if we look at the NASDAQ and the S&P 500, 79% of the time on the hourly time frame over the last 100 hours, they have done the same thing. So if you were to take a long position on the NASDAQ and a long position on the S&P at the same time, there is an 80% probability that they're going to move the same way, meaning that if that move goes against you, you are just doubling your risk. You are taking the same trade just on two different symbols. You can see, obviously, correlation between the US 30 and the US 30 is 100% because it's the same thing. Okay, so what you can do is you can say, if I'm going to trade on low time frames, like 5 minutes, for example, how much are the indices moving together at the moment? Now, this one you can see here, the NASDAQ and the S&P 500, over the last 100 5-minute candles, they have moved together with 94% correlation, meaning that they have done the same thing exactly with those candlesticks 94% of the time. So there's absolutely no point in trading that and that at the same time, because you're just doubling your risk. If you want to trade two indices today, right now, you could trade the NASDAQ and the DAX quite safely, because 36% of the time they move together. Now, as you can see, when I click on this, this little chart shows you how correlated they are over time. Yeah. So you've got positive correlation to the upside and negative correlation to the downside. So if I click over here, you will see that those two symbols, the S&P 500 and the NASDAQ, are correlated pretty much all the time in the same direction. This is on the 5-minute time frame. So if I switch over to the hourly, they become a little bit less correlated because there's more intraday movement within the hourly candlesticks. And if we go over to the daily, you can see that 93% of the time they do exactly the same thing. So there's absolutely no point in taking long-term trades on both of these together. Pick one or the other. Yeah. You can change the number of periods you look at correlation over the time. You can change the threshold as well. So if I just reset this, I'm going to move this over to daily, actually 50, and I'm going to change over to forex. Another reason you will use this correlation dashboard is to basically find a portfolio of currency pairs that you could trade together. So for position trading, this is absolutely key. This is basically what I'm using now, rather than the two currency rule I used to use. Correlation threshold, I want to trade instruments that move together no more than 60% of the time. So it means that I'm going to be able to go long on one and long on another at the same time. And there is no more than a 40% chance that they will do the same thing at the same time, which means that I'm not going to overexpose myself. And I'm also not going to get into deep drawdown on two things at the same time. So setting that correlation threshold there on a daily time frame is showing me how correlated all the currency pairs are with each other. So positive and negative correlation, pretty obvious. Negative is minus, is positive is minus. So if I look at euro yen here versus the CAD yen, 57% of the time they move in the same direction. And there's your correlation chart over time. So going back to July, moving all the way through to today, you can see that they have been fairly highly correlated at 72%, but at the moment, they're only correlated around about 43%. So down here, you have suggested diversification baskets. So what it's doing is it's saying that these 11 symbols have no more than 26% average correlation, which means that if you were to trade all of those at exactly the same time, they're not going to move in the same way at the same time, meaning you're overexposing yourself to the same direction, i.e. doubling your risks. So you can use this basket basically for your position trading. Now, you can also create your own baskets down here. So say, for example, you want to trade, I definitely want to trade the pound US dollar because I'm in the UK and I love trading pound US dollar. It's my favorite instrument. I'm really good at it. I'm going to trade the pound US dollar. So what this will now do is give you eligible symbols you can trade alongside that are no more than 60% correlated together. So you can see I've got a choice now of 19 available symbols to me. If I now go up here and change this to 35 or to 30, for example, I now have 14 symbols available to me. So it will change dependent on how correlated you are happy to basically have your symbols. Yeah. So I've got 19 available to me now. So if I'm going to add in, say, for example, I want to add a yen pair in. So I'm going to trade the CAD yen. I've now got 14 symbols available to add. I'm going to trade the Aussie New Zealand. I'm going to trade, I want some euro pound. So that gives me a little bit of euro exposure. Probably want a little bit more euro exposure, so I'll go euro New Zealand as well. So now it's saying basically I can't trade any more than these 5 with these 5. So we go CAD Swiss, Aussie CAD, pound odd. There we go. So average correlation on this entire basket is 26%. So I know that 75% of the time, these things are not going to move in the same direction. So it gives me safety that I'm not going to be trading the same thing. One good way to explain this is if you look at the euro US dollar and the pound US dollar. So there's euro US and pound US is green. Let me just take some of these. Clear those and just add those two together. So you can see that the pound US dollar and the euro US dollar move together pretty much 80% of the time. So these two instruments, if you're going long the pound US dollar and long the euro US dollar, you're going long the same thing, because predominantly the reason these two move is when the US dollar collapses or rallies hard. So there's no point in trading them both together. You'll have similar results if you trade something something like the Aussie dollar CAD and the Aussie dollar US, 81% correlated. Reason being is you're trading the Australian dollar against the US dollar, and the US dollar and the Canadian dollar tend to move the same way. So you're trading basically the same thing against the same thing. So it just allows you to see instantly how much things move together. One other strategy that we're going to be looking into in the members streams is arbitrage trading. And arbitrage trading is a way of making money when there is deviation in currency pairs that are meant to be correlated. So we can find things that are heavily correlated, and obviously that euro US dollar and pound US dollar are good examples. So these guys move together on average on the daily 80% of the time. So if you go down to low time frames like the 15-minute and you see this dropping down quite low, meaning that they're going off in different directions, we know that on average on a daily basis they tend to move in the same way. So when we spot currency correlations that are lower on low time frames, so if this drops below 50, for example, we know that there's a high probability that they have gone out of divergence and they will come back into correlation together. So what you can do is whichever one has moved up, sell it, whichever one has moved down, buy it. And when they move together, one of them will become profitable and one of them will make a loss. But the differential between them will be the profit. So there's a strategy called, lots of things that people call it, but arbitrage is usually what it's known as. But correlation trading as well is also something that people talk about. And that's basically what you can use this for. So you can find highly correlated instruments. For example, as we just talked about with indices, we know that the NASDAQ and the S&P 500, 87% of the time move together. So when the market opens, or rather on the daily, it's higher than that, it's 93. So when the market opens, if we're looking at a 15-minute time frame, we suddenly see the NASDAQ and the S&P out of correlation, i.e. they've diversified away from each other and are around about 50, 60% correlated, we know that they're going to come back into line at some point shortly. So we'll be able to take a long and a short and ensure that when they move back together again, there's a profit available. So that's what you can use. You can change the heat map colors and things as well. So there you go. So that's correlation analysis. Go and have a play around with that as you see fit. Trading metrics. So we have basically a trading analysis tool built in. So we have down here all the statistics for your trading account. So all you do is you go into accounts. You have a user ID, which is unique to you. You have an API key, which is not generated when you first sign in. You need to click the generate or regenerate. That will say generate rather than regenerate API key. And then you can copy that with those buttons. And basically what I've built basically is an EA, which you can just basically put on your chart. And when it's either for MT4 or MT5. When you put the EA on your chart, what will happen is it will ask you for your user ID and your API key, which you just paste in, and then you just basically let that EA run in the background on any chart. So just open a new chart, stick the EA on there. And what that will do is it will feed your account data into your members area. You can have as many accounts as you want, depending on your membership level, but you can adjust those, the name and the broker of the account as well. And it basically just feeds up that data for you. So you can see a quick overview of your equity curve, your win rate, all the vital statistics about your account. You can see each individual trade that you've taken. It will give you a symbol analysis, very handy for analyzing whether or not you're good or bad at a symbol. If there's something that is an outlier that you just don't make money on, stop trading it. The AI insights will tell you this as well, which we'll go into in a second. But this is a really handy little tool, so you can see how good you are at something. Most traders will have a few symbols which just do not meld with their strategy, their style of trading, or they're just no good at them. So when you identify those, if you remove those from your portfolio, whatever that loss is would not have been lost, which becomes more profit. So basically, it's about analyzing your performance and removing bad performing symbols. Time analysis shows you, this is actually an account that hasn't got multiple months in it, but so basically it will show you month by month how your P&L is going. It shows you P&L by close time in 30-minute intervals. So if you're closing all your trades out at a specific time of day that are losing, there's something wrong, so you can analyze your performance in that way. By open time, you can see where your profit lies by open time. If you're trading, for example, on stock indices, and you're trading the Globex session, which is kind of like the Asian session for stock indices in the US, and you see a load of loss before we get to the open at 16:30 my time, that means you shouldn't be trading Globex because you're losing a load of money. If all of your P&L sits here and all of your losses sit here, stop doing whatever you're doing there. It's not working. Okay, so you can do all that analysis. P&L by weekday, some strategies do have specific days of week where they don't work as well. If you have a big data set, Monday is always a loser, analyze it. Stop trading on the Monday with that strategy, or maybe make some tweaks to that strategy for Mondays and take profits quicker, or whatever you need to do. P&L by duration, this is your hold time. So it shows you how long you're holding your trades for and whether they're profitable. So it shows me on this one, anything that I'm in and out of within an hour doesn't work. Yeah. This is an opening range breakout account. So obviously, yeah, it doesn't, because what's happening is we're either hitting target or we're not. Typically, the longer holds make more money because we're taking trend days, which means if we're holding from 1 to 4 hours or more than 4 hours, we're going to make more money. And we've got a P&L performance down here, which is month by month. You can filter all of this by individual symbols. So if I just want to see how are my DAX trades doing, you can do that. And you can also look at buys or sells only, and you can look at specific data sets. So just show me the last week's worth, 30 days, 90 days, or the last year's worth of data. AI insights, you have to be in a single trading account to use this, which I will switch over to. If you haven't generated it, there'll be a button to generate it. But what this does is it analyzes your trading history. It looks at symbol analysis, time analysis, individual trades, currencies, and your overall analysis to identify your strengths, weaknesses, and opportunities. So what this will do is it will give you your primary insights, which are your biggest strengths, your biggest risks, and your next wins. It will give you additional insights, which is a little bit of a deeper dive into other areas of where you could improve. So it gives you 2 sets of improvements. And then it gives you individual symbol analysis. So it shows you what you're doing well, bad, and where you can improve on individual currencies. Bear in mind, this is AI generated. It does not know your strategy, okay? So it will tell you what the obvious things are. So for example, symbol analysis is very, very easy. If you are losing money on gold, your AI analysis will tell you that, yeah? Your biggest risk is trading gold, where you incurred a loss of $176 with a profit factor of 0.72. To mitigate this risk, avoid trading gold during your identified worst times, particularly 5 and 6. So what it's done is it's gone into the time analysis, it's selected gold, and it's gone, you do not make money between 5 and 6. Stop it. So the easiest thing to do is just to get your account loaded, go to this, press the button, and it will just tell you what's gone wrong with your trading, yeah? And you can remove these elements. And also it tells you what's going right. If you're making loads of money on the Dow, it will tell you that. So maybe you should be putting more risk into your Dow trades because this is working, yeah? So that gives you a breakdown of goal by goal. And at the bottom there, you've got to generate new analysis. Bear in mind, you have a set number of analyses you can do. So you have my account, I have 100 analyses I can do a month. You don't really need to do it that often, but you know, if you want to do it once a week or so, it's worth doing just to come in and make sure AI is updating your information. Under accounts as well, you have one other section, which is import MT4 or MT5 history. This is basically a file import. So if you're not using the EA, which no reason why you shouldn't really, but if you're not using the EA, what it will do basically is you can import and export. So you can go into your terminal, into the account history, you can export it, which comes out as an HTML file, and then you can import that HTML file and it will do the same thing. So it just won't update, obviously. So for me, there's not really any point in doing this. It's really for maybe old accounts. If you wanted to store old account data in here that you had exported, you can use it, but you're going to use the EAs because that's obviously going to update I think it's every hour. I think it's set to update every hour. So it doesn't update regularly, like tick by tick or minute by minute. It's just every hour, it's just pumping data up into here. So this is up to date whenever you want to go and do an analysis. Risk, reward, and prop calculator. So this is and this is part of something we're going to use in the training. It's to demonstrate how risk reward works and how probabilities and losing streaks affect profitability. So this, you can set a starting balance and a number of trades and run multiple simulations to show you what equity curve opportunities or equity curve possibilities there are out there. Very, very important if you're using stop loss based strategies, you understand how losing runs work. This is the main thing that causes system hopping for traders. And this is designed to show you that you are going to have a losing run. So for example, we have it set up with a $10,000 account. We are simulating 100 trades over whatever time period that is, doesn't matter. It's just 100 trade analysis. We are risking 1% per trade. We have a risk reward ratio of 1 to 2, i.e. a 2R return. So with every dollar risk, we make 2. Your win rate is 50%. Okay, so now that's run a simulation there where you can see a nice equity curve, a big drawdown there, equity curve drawdown, and there's a massive drawdown there. Okay, so it shows you the statistics down here. The longest losing streak was 10 trades. Okay, so if you start a new strategy, okay, on this day here, and that happens, this is designed to tell you that that is normal. That is absolutely normal. Having 10 losing trades in a row means that your trend breakout strategy didn't work because the market was going sideways. Yeah, absolutely normal. Breakout strategies and trend strategies aren't going to work in a rotational market. So it's just to be expected. So this is what this is designed to do. It shows you a profit return, a balance, a drawdown percentage, win rate, etc. And it gives you all the statistics, and it breaks down trade by trade as well, the simulation for you. So you can see how the trades worked out in the win-loss, win-loss, win-loss ratio. Okay, and you can run as many simulations as you like there. So if you press the button, There we go. We've got a totally different one. This one, we didn't have the 10 losing streak. We only had 6 losers in a row. Okay, this is all random. Trading is 100% random. When you press the buy sell button, there is a 50-50 probability of that trade working out every time. So this is designed to show you what happens and what is possible. This is a period of what we call stagnation. So on this particular time, we had a massive winning run for around about 30 trades, a third of our trades, and then we went into stagnation. Yeah, for 2/3 of our trades, did not make a very good profit. But we had a run up. Why? Because this is a breakout strategy and the market was parabolic during that period. During that period, the market was rotational. Yeah? So it's because this is good enough to produce overall long-term profit, the way you get to profit is going to be different every time. So this is what this is designed to show traders. And you can just run simulations. You can see over time how your equity curve might look. You didn't make any money there for 36 trades, really. So imagine starting a new strategy. And for 36 trades, let's say it's 1 trade a day, an entire month and a bit, 2 months maybe, you didn't make any money. You're going to throw it away. You shouldn't throw it away. What you should be doing is just waiting for the long-term edge to play out, which is how trading works. So that's how that works. And you can also see what would happen if I was to increase to 2.5 R, how that affects your profitability. You can run different simulations on that. What if I was to suddenly only get 40% of my trades right? Would I still make money? Yes, you would. As many times as you run that, the mathematics are the same. You cannot lose money with a 40% strike rate and a 1.25 risk reward. However, you can lose money with a 1-to-1 risk reward ratio and a 40% strike rate. If you want a 1-to-1 risk reward, you're going to need to have at least 55% strike rate to have a chance of really making money. And it's not going to be greatly profitable. But if you can get that statistic with a 1-to-1, increase your risk. What will that do? Increase your profit, but you will take more drawdown potentially. You can run multiple simulations, which will show you what your maximum drawdown would be on your account. This takes 37% drawdown, but it returned 35%. Why? Because it's a 1-to-1. Increase that to 1.75. Now you're returning 490% with a 26% drawdown. Most traders would run a mile and scream if they saw a 26% drawdown on their account. It's totally normal if you're risking nearly 4% of your account every trade. If you don't like that, move your risk down. If you only want to take less than 5% drawdown, you can do that. So it just breaks down the mathematics for you of trading so you can visually see and run simulations. If you are trading prop, we have the prop firm calculator. This is available for members only, not for free members. This is a little bit more advanced version of the basic calculator where you can simulate challenges. So the idea of this and why I've built this is to show people how to trade prop. In the MST Academy, we have a whole section on prop trading and how to get paid. It is maths, literally. That's it. It's maths and luck and statistics. That's how you pass evaluations. So with this, you can simulate basically any type of prop evaluation or funded account, if you like. So we have a starting balance and a current balance. So if you're halfway through an evaluation, you can adjust it to be as you are. You have a profit target and a maximum loss limit. Okay, and this is your trading plan. Okay, so if you have been trading for a few days, you can say I've been trading for 3 days and my current balance is 101,100, and I want to pass within 10 days. So if you have I want to trade for 2 weeks to get this evaluation over the line, I'm going to trade 3 trades a day. Okay, you may have a trading loss limit or not, depending on which broker or which prop firm you're working with. You can play around with the risk per trade and your risk reward ratio and your win rate to show you whether or not you're likely to pass. So for example, if you've got a strategy which only returns sort of 1.1 to 125. So for example, let's say you're taking the opening range breakout strategy and you're going for a quick scalp. So you're looking for 1.25% your risk. And that happens roughly 45% of the time. And you're risking 1% per trade. Am I likely to pass my evaluation? No. Within 10 days, you will still be in your evaluation, and that is your likely equity curve. So if, for example, we have a really volatile week and this just plays out every day, nice clean breaks, you're probably going to get something like a 60% strike rate. Will I pass my evaluation? Yes, you will. You will pass it with that 10 days. Yeah, that will be your result. Gives you projected profits, your win rate, your losing streaks, and again, a breakdown of it. Now, you can also run this simulation over and over again to see what would happen. So you passed again, you passed again in 9 days that time. Yeah. So that is a good strategy to use as long as you can get a 60% strike rate. But if you don't get a 60% strike rate, probabilities drop. So it allows you to plan what you can do with your prop trading. You can also run batch simulations with these settings. So I can say run 20 batches, what would have happened? 15 of them, I wouldn't have blown the account, but I wouldn't have passed. 5 of them, I would have passed. So if you can achieve a 50% strike rate with a 1.25 risk reward ratio, risking 1%, yeah, the chances are if you took 20 evaluations with a prop firm, you will get 5 of them over the line, funded. The other 15, you won't lose them. Yeah? And this is where it's really useful. People blow accounts because they over leverage and get cross. If they just play the statistics, you won't do that. Yeah, it's hard to blow an account if you stay within the risk parameters, and you can adjust all the risk parameters. So if you have a trailing loss limit, let's look at that 5 and 15 now, you'll probably find it will have more fails, yeah? Because what they're doing, the prop firms, and this is why prop firms work, and this is all going to be covered in the course, is they know how statistics work. They know this mathematics. I'm breaking down the maths they're using to make you fail and giving you the opportunity to show you how to pass it. What this does basically is the trading drawdown, it takes advantage of losing runs, which you're going to get all the time. This has just shown you that. It takes advantage of those losing runs and makes sure that you fail evaluations. So you can run all of this. It gives you maximum drawdowns and success rates and everything. But this is a really, really powerful tool for prop, and we'll be using this a lot during the training. MetaTrader Builder. This is an EA coding system. So what you basically do is you will create a new project and you will say it's my EA, and you'll select your platform you want to trade on, whether it's an EA or an indicator, and then you will describe what you want in here. And this uses AI to code an EA for you. The idea behind this is it allows you to backtest. So you can use these obviously for trading. Backtest first, demo trade first, never put an EA you've just bought on a live account straight away without backtesting or demo trading it. But you can basically describe what you want in here and describe it in as much detail as possible. So it's an example here of describing what you want. For expert advisors, what is the trading strategy? What are the entry and exit conditions? What are the risk management, lot size, stop loss, take profit, timeframes and symbols it's going to be trading, any special features and requirements? So example here, create an EA that trades Euro US dollar on the H1 timeframe with a moving average crossover. Enter long on the 20, crossing the 50 with an RSI 14 below 50 and use 2% risk with a 30 pip stop and a 60 pip take profit. Add a trailing stop that activates after 20 pips. We'll code that for you. Those inputs will automatically be created for you. So this is coded specifically, this AI, for MetaTrader 4 and MetaTrader 5. So it's got all the coding logic and the understanding of the code base from MetaTrader much more enhanced than you will find on other AIs. So this has been trained specifically to build EAs. So once you've built something in here, I'll open this one, which is a test I did. It will give you all the code there, so you can download it and copy it. If all of a sudden you make a change to code or something, or you get some other code added to it, you can restore the code basically. And what that will do is it will ask you to paste in the code there. So I could take this, copy this code and say, I want to go to a backup. If you keep a backup of the code, because obviously it's coding as it goes, and you want to restore to a previous backup, you can do that, just stick it there and it will just upload that latest one. Okay, so you can see here is my initial expert advisor I said, generate a complete EA for MT5. I'd like an EA that allows me to press a buy and a sell button on the chart, which is positioned somewhere in the bottom right corner. I need input boxes and a set amount of risk money and 2 horizontal lines, which will act as the stop loss and take profit. When I press the buy or sell button, it will place lines on the chart and adjust the TP and stop loss. So basically, I created a buy and a sell button with an adjustable TP stop loss, yeah, that I can use to trade on the chart. It provided the EA. When I compiled that code, put it into MT5, it came up with a load of errors. So I said, I get the following compilation errors that need fixing. So it never gets it right first time. Very rarely AI gets anything right first time. Sometimes, but it will usually have compilation errors, which basically are initial build problems. So you paste in there what the compilation errors are, and it analyzes them, tells you what it's done, and then it gives you the new code. If you still get more, because it usually eliminates some and not all, give it what those are again, and then it will recode it. And as you can see, that got it right the next time. So it sometimes takes 2 or 3 asks basically to get the EA built. And that EA actually works. I've already built it and used it yesterday. I did this as a test 2 days ago. And it works. So there you go. So there's your EA builder. So whenever you go onto YouTube and you find some bloke on YouTube saying, this is the strategy you want to use, it's the best thing since sliced bread, look at my win rate with it, I've tested it over 100 trades, it's absolutely phenomenal, it's got a 97% strike rate, immediately you're going to go, yeah, right. So what you can do is take the parameters of his strategy, build an EA, stick it into MT5 or MT4, backtest it, and immediately you know whether or not that thing is actually got any chance of making money. If he's there to sell you something, he's there to get YouTube views or whatever, which is 99% of the stuff you find out there is rubbish and it's just on YouTube to make money, you can backtest it. Rather than you going and watching this guy, following this guy, signing up for this guy, and then going basically for a month, wasting your life and finding out it's a load of crap, why not just build an EA for it, backtest it, make sure it works. If it does, great. If not, throw it away and move on to something else. So that's what it's designed for. But obviously, you can build your own EAs and indicators in here as well. So really powerful tool. AI obviously is taking over the world. So we might as well use it before it turns into robots and kills us. MST Academy, this is basically where we are. So you've got your live calendar, which gives you all the streams coming up. You can see what's coming up every day if you're a member. So anything that is YouTube is free. Anything that is blue is Zoom. Those are for pro and elite members only. And it shows you what we're going to cover every single day. Very simple. When you want to join a stream, just click join stream. And as long as obviously it is live, you will be in that stream. So there you go. So you can pick all the days and it will show you what is coming up on that day, or if there is nothing on that day, what's coming up in the next 14 days from there. Your learning, this is the academy. So we go through obviously all of these lessons. You can go into each lesson, join the live stream. If the live stream has already happened, the recording of the live stream will be there so you can review it. You can ask questions about live streams. So this is the introduction. This is the introduction to MST Academy that I did yesterday. You can ask questions about it, and then I will cover those in the members streams, which will be scheduled for every Friday. So if we look at next Friday, members Q&A. So any questions you ask about those will appear there. You've got my progress. So as you're going through the course content, you can basically go into one of these and mark it as you've watched that. Come back in your progress, it will keep track of everything. So it just helps you remember where you got to. So if I now go into here and go back to there, you can see that's highlighted in blue, means I've watched it. Basically. So if you go down here and watch that one and you watch them out of order, you can see that those 2 are watched. Go into my progress. When you continue learning, it will take you to the one that you haven't watched. So this one here. This is the best way to do it. Just click that and it will take you to the next available one. Obviously, at the moment, all of this content is being delivered live. So as soon as the first run through of the live has been done, this will all be filled with video content you can watch at your leisure. EA licenses. If you become an elite member, you get access to all current and future EAs. Okay, so for that, what that is basically, all the EAs that are in the complete bundle on the Market Structure Trader website, you get all of those included in the monthly membership. So if you sign up to the elite, what you get is the position trader EA at the moment. Obviously, when this expands out to more EAs, you get all of those as well. But you get the position trader EA, the zone trader EA for MT4 only, price action toolkit, ORB, EA, stock index hedge, and the trade portfolio dash. Okay, so what you will will do is this will only show if you are an elite member, but you will literally add a license in there. So you select the product that you want a license for. Obviously, that's also selected. You enter your broker number and your account name, and you add that license. When you add that license in, that will appear in here, and that will be added into the license system. So when you add the EA to the chart, it just checks that you're a member. When your membership expires, if it expires, your licenses go. We also have a feedback bug section here. So obviously this is a new website at the moment, but equally it will be developed. So if you find any bugs or you've got any feedback or you've got any suggestions, select your feedback type, bug report, feature, request or improvement or general feedback, and then just basically fill out your information, select the subject and the message. If there's a screenshot of the problem, if it's a bug or if there's something you wanted improved and you'd like to send a screenshot, you can add that there, just drag it or drop it or click to browse, and then press the button and that will send. Obviously you've got to fill it out first, but it will basically say, thank you very much, we've got your email. Okay, so very simple. So that's the dashboard overview. That's everything that the current release has, which is September 2025. As this progresses and we add more content into it, obviously we'll re-record this video or add to it as we see fit. So there you go. That is everything. Enjoy the dash.